Okay, peeps, welcome back. So today we're going to be talking about will YieldMax ETFs go up in November? And we're going to be taking a look specifically at TSLY OARK, the S&P 500, and the nasdaq 100. So let's get it. The first thing I want to point out here is the weightings of the S&P 500 and the nasdaq. We're going to take a look at those first. So as you guys can see here, a lot of the holdings that YieldMax offers, basically options income versions of, are here on the S&P 500 weightings. So you got Microsoft, Apple, Amazon, Nvidia, Alphabet, which is Google, Meta. You got Tesla down here, and ExxonMobil, JP Morgan Chase. And that's pretty much all I'm seeing right now. So if we add all these up, we basically got like about 2.5 here, another 1.5, so it's about 4%. We'll add on another 5% here, plus 2, 7%. So you got about 12%, 15%, 18% plus these two. So you're talking basically all of the YieldMax funds combined that we're able to see at a bird's eye view is about 32% weighting in the S&P 500. Now, obviously, the Magnificent Seven are the biggest stocks in the S&P and the NASDAQ. So you got Microsoft, Apple, Amazon, Nvidia, Google, Meta, and Tesla, which make up a large majority of the S&P 500. And for the NASDAQ version, we also have some pretty heavy weightings here. You guys can see between Apple and Microsoft alone, it's about 21% of the entire index. If we're just to include the Magnificent Seven on the NASDAQ side, it looks like we have roughly about, so you got about 5.5, 9.5. I'd say we'll round that up and say 14. So 14, 20, 30, roughly about 40% of the entire NASDAQ just for the NASDAQ weightings in terms of how they're weighted in the overall index. So the first thing that we're going to look at on the charts is the Tesla performance and Tesla performance. Okay. So as you guys can see here, we kind of had like this bouncing around zone, and then we recently cracked it because unfortunately the earnings call wasn't that great. And just my opinion, of course, the markets really did not like what the earnings call from Tesla, from Elon Musk, had to say. So yeah, they kind of punished the stock as a result. That's just typically the way it works during earnings season, especially with these big tech companies. They have to be perfect, literally zero flaws, in order to rip to the upside, especially with the Fed still in the rate hiking cycle. Well, they had a pause today, but we'll see if they hike again or they're going to cut or what the deal is. So unfortunately, we did break the support. Can it recover? Yeah, I would say it's possible. Basically, what we would want to see is like continuous upside from Tesla for many months. I would say like 3 to 6 months at a minimum of Tesla just going up consistently. Maybe even as long as a year. It seems like a long time to wait, but then again, if you're invested for passive income, you have passive income to help offset some of that the entire time. So we'll take a look at OARK real quick. As you guys can see, this is on the monthly time frame, by the way. This is the highest level time frame. So as you guys can see, it has kind of been trending down over time. Again, the ARKK fund has basically been getting slapped a little bit because reason being is because it's a lot of the stocks in there are based in the Russell 2000, and as we've told you guys before, the Russell 2000 is made up mostly of really small and micro cap stocks. So you're talking like maybe like a few $1,000,000 all the way up to maybe as high as $1 billion or less than $1 billion. So very small in comparison to something like Apple with $2 or $3 trillion in market cap. So we're in this falling channel. This is actually technically a bullish pattern. Usually there's a break to the upside once it does break out. So we'll kind of show you what that will look like. This is how you would basically measure a move from a breakout in the upward channel. Let's say that it breaks out in, I don't know, December. Just hypothetically, we'll go with that. So the breakout target would be as high as $20.50 a share. I know it's hard to believe because the stock's down so much, but again, the markets have been getting kind of pummeled because of seasonality. August and September are typically pretty bearish. October, even in some cases, although that's a little bit more rare. The turnaround doesn't usually come till November and December. So we'll take a look at, if I can find it here, Tesla, and we'll take a look at Tesla and OARK on the monthly time frames. So Tesla is still sitting pretty. It looks pretty good, honestly, on the monthly time frame. We are kind of sitting at break even on both the MACD and the RSI. You guys can see here we had a golden cross and then a death cross, so it's kind of doesn't really. It's not really sure what it wants to do yet, but in terms of the EMAs, we had a crossing of the 8 EMA and the 21, which is bearish, but we are still sitting above the 51 EMA. This is the 51. Usually I would go with weekly, but this would be monthly in this case. So that's bullish. We're sitting there on support. It's November, so November is typically bullish. We could see a pretty large bounce in Tesla just based on that alone. So we have broken this uptrend here, which is not good. Pretty much what we would want to see at this point is a break above this downtrending level here. If we can get a break and close above that on either the weekly or the monthly or even the daily, that would be extremely bullish. And then we would head back up to basically $410 per share. And obviously Tesla would go up with it. We are still respecting this macro trend line all the way down here, which currently sits roughly at about 131 per share. Hopefully we don't get there. We do have this support zone here between 160 to 190 that's currently holding up the price. So if we go to ARK, you guys can see on ARK that it's a little bit of a different story. We did have a golden cross here on the monthly, so that is extremely bullish. As you guys can see on the crosses here, the moves are kind of insane and they last for a long time. So this was basically the pandemic to the peak. You're talking roughly about 10 months. And then we saw the death cross here in July of 21, and we didn't actually hit a bottom until almost 15 months later. So once again, I'll go ahead and point this out. Basically, what we want to see is a break above this trend line, which we're not far from it. It currently sits at about $50.38. We're about $15 away. And if we go ahead and draw in here a little macro kind of support zone, you can see it's been support for a very, very long time. It's been really major support for roughly about 4 years now. So if we can get a bounce off the support zone, a break above the EMAs, and a close above both the EMAs and this downward trend line, that would be a bullish signal on the monthly and or weekly or daily timeframes. Again, we have a golden cross on the MACD on the monthly. That's typically a pretty bullish indication. We want to see it get above and close above the 0 on both the MACD and the RSI. And then I would say it's clear skies from there. We just head higher, and the price action and OARK would reflect that. So now we'll take a look at the SPX. Before we get to that, I actually wanted to point out this one more time. We're actually going to go back to the weekly here. So as you guys can see, we had a huge bounce, absolutely monstrous bounce on the weekly from this macro support zone here on the 50-day stocks above on the S&P. From basically 10 up to 26. Whether it'll sustain and go up to the upside, we'll have to wait and see for the remainder of the month. And the NASDAQ's very similar. As you guys can see, we had this whopper move here from 12% to 33%. So basically, it looks like in 6 days, less than 6 days actually, we had about a 20% move to the upside. So it's pretty clear that this was, or at least as of current, is major support, and we could be seeing a seriously bullish reversal here. Do note that we saw a reversal roughly around the same time frame last year, and we also saw, we saw another reversal here in October of 2021 as well. So that indicates that we're kind of hitting the bullish season right now. So we're going to go over to the S&P and the nasdaq, take a look at those on the monthly time frame. So this is the biggest time frame. As you guys can see here, we are still bullish on both the MACD and the RSI. Looks like the MACD might be having a death cross here, but then again, that could always be a fake out. That does happen. As you guys can see here, we had a death cross and then we had a golden cross after that. It was a complete fake out and multiple times over here too. So what we're looking for here is what November and December looks like. As you guys can see, November 23, we are bullish so far. If we go back here to 2022, you guys can see that we were mostly up in November, December. December was bearish, but we were still up overall from October. If we go to 2021, you guys can see that October through December, we were generally up, even though November was a down month. So October to December, we were generally up. November and December of 2020 was bullish on both months. If we go back to 2019, you can see all 3 months were bullish and we were up during that time frame. 2018, we were actually down during this time frame, but the reason being why this happened is because the Fed was forced to cut rates because Trump basically came and pretty much told Jay Powell, like, hey, if you don't cut rates, we're going to fire you. So yeah, as a result of cutting the rates, we saw this kind of capitulation here, which again, the yield curve was inverted at the time. It uninverted and then stocks dumped, and that's just kind of what happens. So in 2017, you guys can see we were up on all 3 months. We'll go back even further. We'll go back to 2016 here. So 2016, we had a red October, but November and December were up. We had a generally, we were kind of generally up in 2015. We did end higher than we started at October, although November and December were bearish. We go down to 2014. You guys can see October and November were bullish, and December had a small red close, but we were generally up during that time frame. And again, in 2013, we were up for all 3 months. So in almost every single situation throughout the last 10 years, we were up. Basically, the markets ended higher going into the close of the year. So why do I point this out? Well, the reason why I point this out is because everybody's freaking out. They're worried that YieldMax funds are going to go to zero, all that jazz. I mean, it's possible, but like I've been saying on this channel for time and time again, the markets historically do go up more than they go down. And the end of the year rally is a real thing. It has happened basically 9 out of 10 times or 8 out of 10 times in the last 10 years. So we should see some general upside in both tech and, historically speaking, we should see some upside in tech and in the YieldMax ETFs going into the end of the year. So we'll take a look at the NASDAQ version here. You can see we're bullish during November. We go back here, October, November, December was kind of a mixed bag. We did end a little bit lower during 2022, but again, October, November were bullish. October and November were bullish. December was bearish in 2021, but we did generally end higher. October was bearish in 2020, but we did end higher in November and December. They were bullish. So 2019, we were generally overall up. 2018, we had this capitulation because the Fed just randomly cutting rates out of nowhere. So 2017, we were generally up. We'll go even further in here. You guys can see in 2016, we were kind of sideways, but generally ended green. And then we started like really popping off in the new year in 2017. So we'll go back to 2015. You guys can see that we were generally up during 2015, even though the December candle was red. 2014, we were generally up, so to speak, from the start of October to the end of December, although December was red. And 2023, we were green on all 3 months. So Based on this conclusion alone, we can pretty much gather that the historical data tells us that there is a very, very high probability that November and December are going to be very bullish, and we're most likely going to end higher on the S&P 500 and the nasdaq 100 by the end of the year. And again, most of the market is moved based on the tech stocks, which again, the YieldMax ETFs, a lot of them are based on the Magnificent Seven and other companies. So you guys can kind of see where I'm going with this. If the markets go up, generally speaking, tech stocks are probably going to go up. It's not a guarantee, but there's a high probability of it. And therefore, the YieldMax ETFs, especially TSLY and OARK, the ones that have been beat down the most, are generally going to go up. So anyways, hope you all enjoyed this video. This was, again, addressing whether YieldMax ETFs will go up in November and also December or not. Please like, comment, and subscribe. Hope you all enjoyed the video, and we'll see y'all later. Peace.